What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown. Recently, I made a video about the current coin shortage, and during that video, I asked you guys whether you would want me to do a video on transitioning to a cashless society. Well, I heard you guys, I heard your comments loud and clear, and so today we're starting that. Now, I've thought long and hard about how to actually appropriately address this subject because it's quite a big topic, to be honest, to talk about transitioning successfully through a cashless society, because ultimately that cashless phase is going to be a last dying grip that our government enforces while we kind of transition to ultimately a currency reset. It's going to be one of the last ditch efforts to maintain control of a dying system that will ultimately lead to a currency and monetary reset with new money. Now, the reason why I say this is because I study history. If you go back and you look at these events happening in countries all around the world for thousands of years, this is what happens. As the monetary system starts to collapse, the government tightens its grip on control of the system and increases regulation, increases laws on what money is, how it can be used, what people can do with it, monitoring transactions, and ultimately it's the one of the last efforts by the people in charge of the system before everything collapses and then a new monetary system is put in place. And so I've been thinking about how to properly address this topic because it's not strictly a matter of navigating into a cashless society. It's navigating through that into and through a currency reset. And so there are a number of topics that we'll have to discuss on how to navigate through those phases ultimately into a system with some sort of new money that's established afterwards. One of those is going to be retirement accounts. Another is going to be regular investment, taxable investment accounts. Another one of those is going to be just your average everyday regular transactions like banking and money that's used for paying bills and collecting income. Mixed in there as well are most likely going to be geopolitical concerns with where do you have your assets located physically? Where are you going to be located physically if you're looking at potentially, bet worst case scenario, how bad things might get? Do you have some sort of a backup plan in terms of where you are going to go geographically around the world? So these are all things that we need to discuss here, and so that's the way I'm approaching this topic, is that we're breaking it down and we're talking about how to navigate through a transition to a cashless society, which is a step taken to control monetary policy more and to control financial transactions more, and ultimately through that to a currency collapse, a monetary collapse, and then a restart with new money, and how to get through that as painless as possible. And so we're going to break down doing that transition with multiple parts of your life today, starting with your retirement account, your investments specifically underneath the umbrella of retirement investments. Let's dive in. If you haven't noticed already, I am wearing my new swag. This is my End the Fed t-shirt, and my store is live beneath all my videos now, and so you can go down there. I've gotten my samples in. The quality is top notch. For the shirts, I specifically chose a material. It's a tri-blend material that's really soft, really comfortable, and it's got that slim fit to it. So it's a really comfortable, really nice, high quality shirt here. So this one is the End the Fed shirt. You can pick it up down there. Let me know if you have any ideas for any shirts or mugs or other merchandise that you'd like to see in my merchandise store below here, because I will be slowly adding to it over time. On the back, I don't know if you can see that there, but it's got Heresy Financial written on the backs of the shirts as well. All right, so today we're looking at how to structure your retirement portfolio in a way that sets you up for as much success as possible through two concerns. That's getting to the new monetary system after a currency reset, after a currency collapse. And one of the phases we're going to go through before that is a transition to a cashless society. Now, if you haven't watched my previous video, is a couple videos ago about the coin shortage, watch that now, because that'll explain some of the reasoning why the Federal Reserve through their desire for tighter controls over monetary policy, and the federal government through tighter controls just with regulation and controlling transactions in general, why they would want a cashless society, because they do. And as money starts to fall apart and as the monetary system that's in place starts to become less and less usable and beneficial to people using it, the society will naturally look for alternatives and ways around it so that, you don't have to get screwed when you're just doing your daily transactions. The more people that stop using it and leaving that to find alternatives, the less value that money has, which accelerates the collapse. The only reason that a money has purchasing power is because people use it. Well, the only reason people use money without real intrinsic value is because there are taxes due denominated in that money. And if you don't pay your taxes, you go to prison at the threat of a gun. And so that's why we'll never just really see no taxes, because that's really the only thing that gives the dollar its intrinsic value, is the fact that we have to pay up that money at tax time. But the more and more abuse that the federal government and the Federal Reserve engage in, the faster the money starts to drop in value, which basically means that it gives people more and more of an incentive to stop using that money. Now, the nice thing about your retirement accounts is that it's not too much affected by the actual physical cash side, that phase of the transition. Nobody's really depositing physical dollar bills or coins into their retirement accounts. Everything's pretty much electronic anyway in terms of withdrawals and deposits, transfers between retirement account custodians. And so since all those transactions are electronic pretty much anyway, that part of it won't have that big of a change for you. So for the retirement account, the biggest thing that we need to look at is the actual investments and how they will be affected. Now, most portfolio managers and financial advisors will tell you you have to keep some of your money in bonds and some of your money in cash just for diversification purposes. Now, you can look up ancient wisdom about portfolio allocation all the way back thousands of years and see that that's generally accepted financial wisdom, to diversify, have some of your money in reserves. But the problem is reserves or cash today doesn't mean what it's meant for all of history up until 50 years ago. Because for thousands of years, what that meant was really gold. When you lent money to somebody and you expected them to pay you back in dollars that were worth the same as the dollars that you originally lent to them. And if they weren't the same value, there was a clause in every debt contract that said, I can demand payment in gold for my debt instead of dollars, just in case there's been inflation during that time. Well, when FDR confiscated America's gold, he outlawed the gold clause from being able to be listed in debt contracts. That was when gold was really demonetized for American citizens, because American citizens couldn't use or hold or demand gold anymore. But prior to that, for all of human history, when you look at, ancient financial wisdom and writings and economic and textbooks and financial texts, whenever they say cash or money or reserves and even debt, the assumption was that the real money that's backing all that up, at least, was gold. Now, here's the rub. It's very, very, very difficult to invest in gold with an IRA. And if your retirement account is through your employer, it's even more difficult. Now, I know there are many people that have had job changes in the last couple of months due to the economic crisis that we're facing right now. So if you're in that camp where you've had a job change, you're in luck, because that means your 401k, you can now move that wherever you want. And even if you haven't currently had a job change, if you have any amount of money in your 401k that came from a prior job, you can take that amount and move that anywhere you want. So when you move either that entire 401k or a portion of it somewhere else, you're going to move it into something called an IRA, an individual retirement account. And those will give you a lot more control over your investments than the standard 401k will. Now, just in case you're in the camp where all of your retirement money is in a 401k and that's the only job you've had, and so you can't move any of it anywhere, then your only hope is to give them a call the 401k holder and say, does my employer offer a personal choice retirement account or a self-directed brokerage account within my retirement account? Because then, underneath the umbrella of your 401k, you can open up that self-directed sub account and you can invest in whatever you want as long as it's publicly traded like a stock or an ETF. Sometimes you can even do options as well. Now, the next best thing, like I said, is to be able to move it into an IRA, because then you can hold that IRA anywhere that allows you to invest in whatever you want. Now, some people have asked me, hey, I know that you're supposed to invest in gold with the cash portion of your portfolio, but there's not really good options to invest in gold with your standard IRA, because really the main option is going to be something like GLD or a mining stock. And I've listed at length the problems with something like GLD before because of just counterparty risk. There's so many layers of risk investing in a gold ETF that you don't know if there's actually the gold there to back up the value that they say they have. And so there's far too much risk there to trust that that's actually gold. On the other hand, when you look at a mining stock, yeah, there's, it's a stock that has a mine, but it's an equity. That's a stock. You should not be treating mining stocks as if it's the reserves or the gold portion of your portfolio. You need to be valuing it as if it's an equity. It's a stock. Yes, it will do well when gold is doing well. And I think even at current prices, gold stocks are still some of the best buys of the decade. But that doesn't change the fact that they're stocks. They're not reserves. It's ownership, it's equity, it's not cash money gold. Now I'm presenting to you what I think is the best option, and it's called an alternative investments IRA. Sometimes it's called a self-directed IRA. And beyond just publicly traded stocks, mutual funds, ETFs, options, these type of accounts allow you to invest in a far greater variety of investments than just your standard IRA somewhere like Edward Jones or Charles Schwab or TD Ameritrade. These accounts will allow you to invest in things that are not publicly traded, things like physical gold and physical silver, things like Bitcoin, and things like real estate, physical real estate, not REITs. So alternative investment IRAs or self-directed IRAs are some of the best avenues you can use in order to deploy the portion of your retirement portfolio that you want to be in reserves. So I'm not saying to do this with your entire portfolio. I'm not even telling you that you should do this because I don't know your exact situation. But if you have a portion of your retirement portfolio that you want in something like gold, an alternative investment or a self-directed IRA is going to be the best way to do that, because that's the only way you can actually get that money in physical gold or actual Bitcoin instead of something like through, the GBTC, the Bitcoin Trust. Now, keep in mind, you don't have to have every one of your accounts perfectly allocated. Let's say you have, you're worth $300,000. You want $100,000 of your asset value to be invested in stocks. You probably have, some options on them to protect them from the downside. You bought some puts on them. You also have, $100,000 invested in real estate. That's the, your equity portion of your investment real estate, like a rental property. And then you've got another $100,000 that you want in reserves, let's say in mostly gold and maybe a little bit of Bitcoin. You don't have to have that exact allocation in every single one of your accounts. You can have one account that's fully invested in equities. You have another account that is just fully invested in your gold and Bitcoin. You don't have to have every account perfectly allocated. As long as your overall investment portfolio is allocated correctly, that's the same thing. It's 6 of one, half a dozen of another. You still have the right allocation overall. So if you have the ability to take some of your retirement portfolio and move it to an alternative investment IRA, my favorite one is this one right here called I Trust Capital. This is by far the easiest and cheapest way to invest in physical gold and actual Bitcoin that I've been able to find. There are plenty of other services out there that do alternative investments like gold and Bitcoin with your IRAs, but most of them, because it's an alternative investment or a self-directed account, the paperwork is really difficult to get through and the pricing makes it cost prohibitive unless you have millions of dollars and they can take that percentage cost down for you. So I Trust Capital is something that is it's really cool. They've got a fantastic user interface. Their pricing is extremely reasonable. It's $30 a month. And then for crypto trades, it's 1%. And then for gold trades, it's going to be $50 over spot. Now they're coming out with silver soon, I believe. And so if you want to invest in silver as well, that's a great way to do that. Within probably the next couple of months, they'll have silver on their platform as well. Now keep in mind, this isn't investing in an ETF or a trust. This isn't like GLD, and this isn't like GBTC. You actually own these assets directly. So with precious metals, with gold, they use something called Vault Chain, which is a blockchain management system to own physical gold through the Royal Canadian Mint. And so they're associated with Kitco, which if you follow gold at all, Kitco and Vault Chain, they're one of the biggest names in gold ownership. And so their reputation is there. They're very trustworthy. And so I Trust Capital partners with them in order to make sure that it's as safe as possible that they're holding gold for you. So I highly recommend I Trust Capital. They only have $1,000 minimum, so it's extremely easy to get started. I've got them linked in my description below. Check them out. So just to recap here, we're looking at ways to structure your financial life in a way that will prepare you to navigate through a transition from, a cashless society, all electronic and digital transactions, through the debasement of the currency that will come around as a result of that, through the watchful eye of the federal government that will come as a result of that. Navigating that, again, through that, we're going to see a currency collapse and a reset where we're going to soon experience new money. We're not going to be using the dollar as we know it today for that much longer. And so navigating that to make sure that you're structuring your life in a way that you come out with as much success as possible. It's largely about setting up a structure that will allow you to, float those volatile waters. And the retirement account portion of this is a little bit easier than the rest, because the retirement account portion is making sure that your reserves portion of your investments are not subject to monetary debasement. No government can come in and make your gold worth less. No government can come in and make your Bitcoin worth less. And so structuring the reserves portion of your portfolio in a way that is safe, it's invested in something that's actually there, reducing counterparty risk, reducing risk of inflation, means getting out of things like government bonds, getting out of things like cash, and then holding your assets in a way where there's very little counterparty risk, if any, very little fees, so you're not seeing your total value drip away, and you're maintaining your purchasing power. Coming up next, over the next week, I'll be doing videos about this same topic. We'll look at structuring your regular investment, your taxable investment portfolio, structuring your whole your budget system, basically your cash management system, your day-to-day living, what you do when you take in income, what you do when you pay expenses, how to make sure that you're going to be able to navigate those waters successfully. And then we'll also look at some lifeboat situations, if you will, some escape plans, just in case, scenarios. We'll look at, worst case scenarios, escape routes, basically, how to make sure that no matter what happens, you're able to preserve what you have, what you've built, what you need, and for you and your loved ones as well. And as always, I really appreciate you guys. Let me know if you have any questions or thoughts in the comments section below. You guys are the best. Have a great day.